U.S. consumer inflation out just moments ago, coming in above the estimates despite a series of jumbo rate increases by the Federal Reserve. CPI came in at 8.2%. It's down slightly from August, but it is above forecasts of an 8.1% increase. While core CPI, that one hit 6.6%. Again, it is higher than analysts' estimates of 6.5%. And Will Denslow joins us live from New York to break down the numbers. Now, Will, what do the latest inflation numbers tell us about the state of the U.S. economy, and how are stock futures reacting to that data?
Well, essentially, it shows that inflation remains stubbornly high in the United States, and maybe there was a bit of a precursor that we saw on Wednesday with the producer price index, looking at how costs of goods that are made and produced costs ticking up more than expected as well, up at 0.4% for September compared to the 0.2% that analysts had expected. Now, of course, this comes despite the fact that the Federal Reserve has already raised interest rates some 5 times this year, including a few mammoth rate hikes of 75 basis points for the last couple of meetings. Now, looking at how stocks are reacting, as you imagine, the Dow future, S&P and NASDAQ futures all firmly in the red. The Dow dropping some 450 points on the news. The Dow Jones at last check trading its futures down more than 1%. The S&P futures down close to 2%, with NASDAQ futures down over 2% before the markets open.
Well, we've also got the latest initial jobless claims numbers and expectations. Tell us more.
Yeah, these weekly jobless claims, well, they ticked up ever so slightly compared to last week's figures. 228,000 people applying for first-time jobless claims in the United States. But really, the labour market remains relatively robust despite what we're seeing as some growing headwinds for the US economy. Of course, we recently saw the release of September's jobs report, of course, seen as the biggest monthly snapshot of the US labour market. That showed that 263,000 jobs were added, which remains cooler than it has been, it must be said, over recent months, but still relatively robust, despite the fact that we're seeing, of course, these increased price pressures. Now, the Federal Reserve has warned that they do expect the labour market to cool somewhat as they try and raise interest rates in a bid to ease these price pressures. And of course, when it comes to the overall health of the US economy, we've recently heard from JP Dimon, the CEO for JP Morgan, of course, one of the major banks here in the United States. He warns that we could see a recession in the United States in the next 6 to 9 months. So real concerns as the Federal Reserve keeps raising interest rates that could have real ramifications for the wider economy.
Yeah, and Will, one more question. The Fed also today releasing its meeting minutes, and they've said again that high rates, they're here to stay. So we're most likely going to see another hike in November when it meets again. But any idea how much that could be?
Well, analysts really were, before the release of this CPI data, pricing in an interest rate hike boost of around 75 basis points, of course, in line with what we've seen from the Fed over the last couple of meetings. There will be some rumors and murmurs whether the Fed will go even stronger, even a 1% rate hike. I think for most analysts that'll be somewhat unlikely. Many will still predict the Federal Reserve will go ahead with another 0.75% rate hike when they meet in early November. Of course, we've seen these 5 rate hikes so far this year. Many analysts expect interest rates to continue to rise at least into early 2023 and then to remain relatively flat for the duration of this year. But of course, the message we've heard from this Fed minutes is that there is real concern that we're not seeing inflation tick down to that 2% benchmark that the Fed wants to see. And of course, as we've seen from this latest CPI figure, it remains stubbornly high. From those minutes, some Fed members did say they are concerned about the broader health of the economy. Of course, even the United Nations has chimed in saying they want to see central banks around the world take into account the state of the economy and to worry slightly less about inflation. But it seems that the central bank committed to going full steam ahead with these rate hikes.
Well, thanks for that. Will Denslow reporting live from New York.